Am I audible?
Yes.
Hi everyone. Good afternoon. How many of you have done algo trading or even day trading in your lives? Stocks, futures, options, crypto, anything? Okay. I haven't done any day trading till about 1 year back, so I have no experience in this. We'll just see how it looks like. I'm Shom, and today I'll start with a little bit of a confession, right? A little about a year ago, it was in March 2025, we three co-founders in Infainite, the startup that I represent, we said something that seemed like obvious at that point in time, however, turned out to be one of the most humbling experiences of my career for sure, I think for the other two careers as well. So what we said was, we analyze data for a living, just like all of us do, and financial markets generate more data, like any price data or any data every minute, more than any other industries combined, let's say, in a day. So why can't we turn the lens on ourselves? That was the question that we asked, and that question triggered a year of building, breaking, learning, and occasionally wanting to give up, because this problem is so hard to solve. So that's the confession I wanted to make, that there was a lot of times when we wanted to give up because of the losses that we were making. Right, so and that's the thing that I want to talk to you about, that what the market has taught us about data. Today we live in a world where we are drowning in data, right? If there's a retailer and you purchase something from that retailer, probably the retailer already knows what you're going to purchase next week, even before you do, right? If it's in healthcare, there are models in place where it can actually predict patient risk even before sometimes symptoms appear, and so is in all other industries. The point is, financial markets have been in place longer than ever, right? It is actually generating very clean, structured, timestamp data, and better than any other industry. The moment the market opens, there's a price that opens, it moves, it closes. So when we looked at the market data, we didn't see trading. What we saw was a data problem. Right? A very clean, a very honest, and a very unforgiving data problem. At Infainite, we believe in one thing: whatever we do is anchored on one belief. Don't start with the technology, start with the value, and keep the solution simple. We call this value-based analytics, right? Now it's very simple to listen to, like, yes, value-based analytics, but it's very hard to practice, especially when you're surrounded by today's technology stack, and then, you know, it's so easy to build nowadays with all the AI capabilities available, right? But what we did was, even before writing a single line of code, we asked, what does winning actually look like, right? What is the measurable outcome? Does the data that we have, the market data, even support this particular question? So you prioritize for that realizable value, you solve for that opportunity, and then you basically keep the design very simple, right? Because simplicity almost always outperforms sophistication in production, and we learned it the hard way. So we kept all of these principles into this problem, and the market being the market tested all of them. Now, I was telling you, right, that when we looked at the market data, we looked at a data problem, not necessarily a trading problem. What we do is we look at 1 minute or 1 minute interval data. You can choose your time interval. It can be 5 minutes, 15 minutes, 1 hour, whatever it is. So every minute, if you just look at one stock, you can multiply it by number of stocks, number of strategies, whatever it is. If you just look at one stock, you get 5 key primary metrics. At what price, at what particular point the price is starting, which is open, at what particular point the price is at its peak, which is the high, where the floor of the price is, which is the low, and where it closes. And on top of that, you also get the volume data, which is nothing but the conviction behind that particular movement in that price. Now, in trading terms, it's called candlestick, but in data science terms, it's called box plot, right? It's nothing, the same. If you look at the structure of the box plot or the candlestick, you can actually understand what's the market sentiment or the context behind that price movement is. And if you go a little bit in history, let's say 1 hour, 15 minutes, or whatever it is, you can actually create hundreds of derived metrics out of these 5 key metrics. It can be ATR, VWAP, EMS, anything, and you can actually create your own metrics. Now suddenly what you have is a very clean, structured time series data, just like what you have in any other industries. And the same mathematics will apply here as well. Just like you solve a detailed problem, you can solve it here. It's just that it requires a little bit of more complexity. I want to be transparent here, right? So this is something that where I want to be transparent. While building it required a little bit of a kind of adaptability that we didn't anticipate it back then. In the same week, sometimes in the same day, we were thinking about statistical model design, like how my model will buy, sell, hold on its own, right? That's one. We're thinking about software architecture. We're thinking about risk management logic, like just not the stop loss, any risk that is associated with that particular strategy. We're thinking about execution infrastructure, data pipeline, as well as strategy validation, like which strategy to apply on which stock at what particular point in time. Now all of this, right, it actually sometimes requires, we didn't have any specialists. All the three co-founders, we are hands-on and we actually have built this system from ground up. So what we look at is how can we make this entire system optimized, like a macro level of optimization. So we do not optimize one layer at the cost of the other. We look at how the system can be optimized as a whole. I'll give you an example. After we went live, 2 months after we went live, we figured that the data pipeline logic that we have was not proper, right? And how did we figure it out? When we do backtests, so after every live session we do backtests to see that whether the live session, whatever results we got, whether it was profit, loss, can we match it in the backtest? And we found that sometimes it was not matching, and then when we dug deeper and deeper, we found that there was a data pipeline logic issue in the live where we were already trading with the real money. But ironically, what we found was we should have got X% net profit. But because of the improper data pipeline issue, we were getting X plus delta. So we are getting a little extra. What do you do? Would you change it or would you keep it? Will you change it? You will change it?
No, keep it back.
You will keep it, right? Yeah, we changed it. So we said that no, I don't want that data. You know why? Because if you look at this entire system, if I cannot replicate it for one stock, how can I scale it for multiple stocks? How can I scale it for multiple strategies? So I can't create an optimized system as a whole. And hence, for the sake of one optimization, I cannot put the others at risk. Right? So you have to think about it from an overall system optimization standpoint, even if it means that you are letting go of a little bit of more profit. Because that profit might have been for only 3 months, who knows? It might not be there for the next 1 year. Can happen? Yes, so that's why you basically look at a whole system optimization. Now, the way we looked at this entire build is how we look at a software engineering pipeline. We looked at it as a dev, staging, and production layer. So for building any system, right? So what we do is we backtest it, we simulate it, right? We create a simulation engine. That's how it started. Now, the way we built that simulation engine, suddenly we found that we were getting some amazing results. Like, we thought that we'll be multi-millionaires in about 2 to 3 years or something like that. But remember that when it is too good to be true, it is too good to be true, right? So which meant that our system was overfitting the data a lot. Our simulation was overfitting the data a lot. So that's when we figured that backtesting is very important. You need to create a right amount of training, test, and validation data and things like that. The next step is on paper testing. What is paper testing? You basically replicate the live environment, but with paper money. It's not real money, right? It's safe, right? Because you are not risking your own money, but you are testing your backtesting methodology as well as you are testing the entire pipeline, which is your data pipeline, your ML pipeline, your system architecture, your entire infrastructure you are checking. And sometimes it also breaks, so you can check it there, you can validate that, and then you only move on to the live mechanism. In the paper testing, you can also come across things like slippages, right? So you want to purchase a stock, let's say for $100, but because of the market dynamics, you end up purchasing it at $100.05. You want to sell it at $99, but you end up selling it at $98 because of the market dynamics. That impacts your P&L, right? And hence, the paper trading becomes very important. If you do the paper trading right, the hot bet, which is the live test, becomes very easy. That's where the market speaks, right? You will still get a lot of edge cases or some edge cases there, but at the end of the day, if the paper trading is done right, the live generally comes out to be proper. When we went live, I remember that the first 1 week to 1 month was an emotionally draining journey. Every day when we wake up, we generally trade in the US market, every day when we wake up, it used to be like a emotional journey of profit or loss. How much have we lost? How much have we made profit? But slowly, when it's been about 8 months that we have gone live, that emotional thing has come down, but it's still there. 3 things that I want to talk about here. Some of the learnings that we had, which was keep the strategy simple. The more complex it is, the worse it is for the market. Let's add one extra filter. Let's add one extra signal layer. Let's make the model a little bit more complex. Every time we started doing that, it meant more overfitting, and the market punished us. And that's how we learned that keeping it more simple, more generic actually is better in this kind of strategies, because you are not there selling or buying the stock. You are basically creating an engine that does it on your behalf. So hence it needs to be a little bit more generic and simple. Next is listen to the data. What does that mean? Sometimes what the data showed us versus what our perception about market or that stock is different. We might think the stock should behave differently versus what the data is telling us. Whenever we went ahead with our gut, we regretted it. So it's better to listen to that data. Third is confidence and certainty are 2 different things. You need to be very confident before you go live, there's no doubt. If you are not confident about your strategy, you can't go live and you can't put your own money onto the market. So that is there. However, if you are very certain, I'm certain this will work, I'm certain I've figured it out, that's when the market comes back and bites us. So confidence and certainty are 2 different things, and we should not be complacent about after getting a few profits. Now here's my closing thoughts. The most valuable thing that we think we have built in this entire last year is not just the system, it's also how the system has forced us to unlearn things. The process, letting the data challenge us, sometimes being open to be wrong in this entire thing. All of these things, this is not just true for trading methodology, because whatever we applied, it is from our previous experiences, and it is true for anything that you build. We are still building, we are still iterating. I'm genuinely not in a position to share some of the results that we have because I'm not allowed to. However, if you thought that this might have interested you, the process, the journey, or some of the questions that you might have in around data or trading, I'll be around. And those are 2 QR codes, one for me and one for Infainite. So please stay connected. Thank you. And if there is any questions, happy to take them.
I have a question.
Go ahead.
What's your biggest learning in the last 1 year?
So I think apart from those 3 that I just mentioned, one of the learning is that sometimes we felt that we will be, the strategies used to give us returns like enormous returns, and we used to think that in 2 to 3 years we will be multi-millionaires. When it is too good to be true, it is too good to be true. That means there is some problem with the analysis, and we found that we had overfitted the data. That was the learning. So if it is too good to be true, it is not going to be true.
Yeah. So how many of the strategies are logic-based versus ML-based?
Most of the strategies are logic built. I'll say 90%, 10% is ML, because you don't need ML for something like this to work. It has to be as generic as possible.
The second question that I have is like, in the ML-based trading strategies, how blindly you can trust the results?
Sorry?
For the machine learning-based strategies, how well you can trust the results?
So this 3-step process that I was talking about, right? The simulation, paper trading, and live trading. I'll answer that question, just hold on to that for a minute. When we started, right, to go from here to there, it took us a long time. But right now we have built this entire framework such that from the first step to the last step, it hardly takes us any time. We can go there in like a few days. Because at the end of the day, you still have to do some paper trading, right? So that those number of days of paper trading is important. However, this back testing hardly takes any time. So it is not really about the question whether I'll do a ML test or a logic or any other test from here to there. Any logic that you fit or any model that you fit, if it is holding true here, you still have to do a robust paper trading in order to see that how that particular strategy is gaining, is giving you profit or loss. If it is not holding in the test environment, which is the paper trading environment, then there is something wrong, right? So it is really not the question that am I treating a ML model differently than a logic model? No, I am not, because at the end of the day, the framework should work for any model. Does that answer?
Can you tell us about that delta? Can you please tell us about that delta in that pipeline that you mentioned? That you just elaborate that a bit.
So when we build this particular, infrastructure, right? So the way you will always be on a particular platform, right? Let's say if I am talking about Indian market, although we do it in US market, there will be multiple platforms like 𝗙𝗏 or 𝗕𝗏 or whatever it is, right? And you will fetch the data from there through a via API. The way you are fetching the data also gives you a little bit of an edge. Right? And because at the end of the day, the moment, let's say 9 AM or let's say 10 AM happens, and you get the data at 10:01 versus 10 AM and 30 seconds, there's a difference. Right? So how quickly your system is working. If that particular logic is not clear, and if that particular logic is not sustainable, then it will create problems in your live environment, or it will create problems in scaling up, especially when certain stocks are too volatile. Right? So that's where the delta happened, because if I am not working with a volatile stock, maybe it will work fine if the data pipeline logic is not great. However, if it is a hugely volatile stock, then the data pipeline logic has to be very proper and stable. Which is where we found that if we do not correct the data pipeline logic, it's not scalable and sustainable. And it was just by luck that we were getting that extra delta. It could have been a negative delta, or it could have been a much worse scenario. It was just luck.
So let's just say that you already have a strategy in production, right? So how do you determine that this strategy still works, it's not outdated, and how do you basically, if there is any metric that you use, and if you determine that it is outdated, how do you go ahead about that?
Right. So when you do the back test or when you do the simulation logic, you will see that what exactly, so no strategy is there, at least I haven't seen till now, there might be something, that gives you a steady 10% return every month. I haven't seen that, right? Then it will be like a FD. It is not an FD. So there will be volatility in returns. There will be profits, there will be losses and things like that. So from your backtesting, from your paper trading, you will always see that what the window is for your sustainable return. And you will always calculate those good old methodologies of mean, median, mode, standard deviation. How much is your mean plus minus 3 standard deviation, mean plus minus 2 standard deviation? What is the percentage of times that you are supposed to get a return within this particular bracket? Right? The good old standard deviation measures. Now, if your strategy is giving you returns, let's say in 3 to 6 months, within that particular range, you know that yes, it's working fine. But you cannot judge that based on just a week or just a month data. That's what we have found, that you need to give a strategy that due time, and if it falls within those confidence intervals regularly that you have found, because this is your true test bed, then you should judge that the strategy is working fine. And then on top of that, it's just not the returns, it's also the win-loss ratio. Based on your strategy, what's the win-loss ratio that you have at a trade level? Is that win-loss ratio really going down versus going up, or is it also following in that same bands? That also determines your success.
Thank you.
Yep.
Algo-trading has been there for a while, which is load-based. So currently, how are you leveraging the LLMs into this?
We haven't leveraged LLMs. We have tried leveraging LLMs. We haven't got an extra edge here. That's us. There might be somebody who is getting an extra edge, we haven't got an extra edge. Thank you everyone, thanks for your time.